I think it's a resolution. In terms of the markets and what happens going forward, what will matter most is what happens to policy. And I think we're not going to get a lot of spending gains as we go forward. We've already got it baked into the cake that fiscal year 2019 will be strong. The federal spigots are on. The question is, will we get additional ones on that? And that would take a lot of agreement both within the two parties and across party lines, which I just don't have a lot of hope for these days, even though I think there is a desire to do infrastructure spending out there. I think adding to the deficit would be an interesting and difficult thing to do at the end of 2019, further adding to it. I also think it's important right now to look at where the Fed is. I mean, this is not going to change, and I think it's important that Jay Powell is sort of affirming the strength of the economy by raising rates, and he's really doing frankly, what Janet Yellen would have done in his position. And I think that's something that's lost on financial markets. The context of the economy has changed. They're chasing growth up now, and that's not going to be any different as we move into the next year. Even as growth slows, unemployment will continue to fall, and wages will continue to pick up.
Also with us now is Pimco's head of public policy, Libby Cantrill. You know, Libby, Nate Silver right now at 538 has about an 85% chance put on the Democrats retaking the House. If that happens, are we going to see an opportunity for the Fed to slow down the rate hikes a little bit? There are some that say that the Republicans keeping the House means more spending, more stimulus, more aggressive growth.
Yeah, I mean, it's a good question. I actually think in some ways, and I don't think the market's positioning for this, but I think if the Democrats were to sweep both the House and the Senate, the likelihood for fiscal stimulus actually increases quite significantly, because then I think the chances for a big infrastructure package that Diane alluded to actually increase remarkably. Now, if there's a split Congress, which I think is sort of the base case, given what Nate Silver's odds are and other pundits, then I would agree with Diane. There will be a push for infrastructure among Democrats. They want to show that they can govern, but the deficit concerns are going to weigh on Senate Republicans. In some ways, I actually think you see less fiscal stimulus if you have a Republican sweep. So it's sort of counterintuitive, I think, counterintuitive in terms of what the markets are positioning for at this point.
If we got infrastructure, would the discussion of what workers we're going to find, would that be part of it? All right. I mean, can barely operate the economy we have with the workers we've got.
Yeah, well, I mean, it's a good point, Carl. But I think in terms of infrastructure, in terms of fiscal policy, I think many people would argue that infrastructure actually could increase potential growth, could increase productivity. Right. So sure, actually, I think labor might be an issue, but in terms of actually increasing the potential growth for the economy, I think some folks would argue that that would be a more effective mechanism than just tax cuts.
Diane, I'm old enough to remember when people were talking about deficits and fiscal responsibility and out-of-control entitlements as something the markets cared about. But I'm not sure which party represents hope or threat in those categories anymore. First of all, does the market care about those things? And if so, how do you factor that in depending on which way things swing?
You know, it is an interesting issue. Does anyone care about it anymore? Consumers are saying they care about it. And actually, when polled about it, they say they're worried about it. That's not been the case for quite a long time. So that's some good news, because that may mean that they've said they care about it when going to the polls. We'll see, because I don't know anyone who's actually talking about it who's running in the polls right now. But that said, they said they care about it. So that's one good thing, I think, down the road. I do think that we've got some interesting pressures building up. And it is that we're adding more and more to the debt and deficits at the same time the Fed is allowing its bloated balance sheet to gradually contract. And that means there's not as much support from the Fed at the same time that China, no matter what happens going forward, they're not going to be able to provide the same support they once did. They've already slowed their purchase of bond purchases. They're not about to sell them. But I think we're losing some of the support for bond buying that we had seen, which we've already seen as a rise in long-term rates. I think that's where you could see a more dramatic rise in long-term rates and be surprised on the upside because of the shifting dynamics of deficit spending without the supports that once were keep putting a cap on rates.
Libby, let's talk about trade then for a minute. You heard Diane bring up China. We know that the Congress needs to approve this new deal with Mexico and Canada, no longer called NAFTA. Where do you think we come down on trade if we have a divided Congress?
Yeah, it's a great question. I'm calling it NAFTA 2.0 just for ease. But
or 0.5, depending on how you look at it.
Right, exactly. The USMCA. So I actually think this is something that's also underappreciated in the markets because if Democrats were to take back the House, I think NAFTA 2.0 ratification is actually much more difficult than folks are expecting it to be. Democrats are going to want to put their imprint on NAFTA 2.0. I don't think they're just going to sort of swallow whatever deal that the administration had negotiated. So I think ratification and as a result withdrawal risk actually comes back into the frame in 2019 should Democrats take back the House.
Diane, one last point. It's a little bit afield, but I keep seeing conference calls, investor calls to explain the dynamics or consequences of a hard Brexit. How much of that is on your radar?
It certainly is on my radar, along with all of the trade stuff. I'm encouraged that the administration seems to be noticing its effect on financial markets and perhaps the overall economy, so hoping that they'll back off on some of the escalation with China. But Brexit is something very real out there that I think we're underappreciating its risk. We've seen a major slowdown again in the UK after sort of a false summer warming trend, and I think that's something that, it's 2 years in the making. It's only a vote, not an action yet, but it's an action that could happen fairly soon.